Good morning and welcome to this weekly markets update from AGM Markets. Today is the 14th of April 2014. What we'll do today is go through some technical analysis on Euro dollar, cable, dollar Swiss, Aussie and gold. Just going to review what's been going on in the charts over the last sort of week and give some sort of outlook for next week in terms of technical setups. We'll not make any trade calls recommendations in this video. Trade at your own risk. If you'll please read our full disclaimer, which is on our website at www.agmmarkets.com. Also, for any new followers out there, we have 3 moving averages on each of these charts. The red one is a 50 simple moving average, purple is 100 simple, and the gold is a 200 simple moving average. Before we look at the charts, let's just have a look at the Forex calendar for the week. It's just mainly focused on the high impact news here, so the ones that are in red. Today, the main news out is from the US. That's the US retail sales, the month-on-month figures. That comes out at 1:30 p.m. That's GMT. Forecast for that is 0.8% versus the previous 0.3%. And of course, we're at the same time we have the core retail sales numbers as well. The previous is 0.3%. The forecast is expected to beat that at 0.5%. On Tuesday overnight, we have from Australian monetary policy meeting minutes. So keep an eye on that. That should be that should really move the Aussie. At 9:30 a.m. GMT with the UK CPI year on year, and there's quite a lot of UK data out at 9:30, but the main one is the CPI. The previous is 1.7%, and the forecast is expected to be 1.6%. And as you can see from the previous sort of data, you can see that inflation is really slowing here in the UK. So, what the previous, well, the last number was flat in terms of forecast, but in terms of all the previous, they've been decreasing there. So, yeah, do not be surprised to sort of see that hit that 1.6 or even lower, really. Then at 10 a.m. From the Eurozone, you've got the German ZEW economic sentiment forecast to be at 46.3 from the previous 46.6, so a slightly softer number there. And at 1:30, we have from Canada manufacturing sales month-on-month numbers forecast is 1.1% from the previous 1.5%. And we have US CPI, the core CPI being the main focus, forecast at 0.1% from the previous 0.1%. And at 1:45 p.m. we have the Fed Chairman Janet Yellen speaking, so keep an eye out on that. That should be quite volatile for the US dollar. And then overnight on Tuesday going to Wednesday, late on Tuesday actually, because it's 11:45, it's not overnight technically. We have from New Zealand's CPI quarter-on-quarter numbers, so we're expecting higher inflation here. The forecast is 0.5%, the previous is 0.1%. And on Wednesday, quite a bit of news here on Wednesday. The main focus here overnight, we have some Chinese data, so you've got GDP numbers there, you've got the industrial production year on year. From Japan at 7:15 a.m. you got the Bank of Japan Governor Kuroda speaking. At 9:30 we have the UK, so we've got the unemployment rate, we've got claiming count change. At 1:30 we've got US building permits. At 3 p.m. From Canada you got all the Bank of Canada stuff, so the rate statement, monetary policy report, and of course the overnight rates, which is forecast expected to stay the same there. Then at 4:15 you've got the Bank of Canada press conference, so they'll be talking about the decisions about keeping the interest rates and highlighting the rate statement, etc. And at 5:15 Janet Yellen is speaking again from the Fed. And then on Thursday, quite a quiet day in terms of the previous Wednesday. There's a lot of stuff coming out. But on Thursday overnight, you've got Bank of Japan Governor Kuroda speaking again at 1:30 a.m. For those of you who trade the Asia session. And then at 1:30 from Canada, you got the CPI data. So you got the normal CPI and then the core CPI, which is more focused on They're both expected to drop, actually, quite interestingly. Then out of the US, you've got the weekly unemployment claims. So that's forecasted to be 316,000 from the previous 300,000, so we're expecting a bigger number there. And to round off the week, well, because there's no high impact data on Friday, as you can see, because it's a bank holiday in the UK, Canada, Europe, and in Switzerland. So expect the markets to be quite quiet on Friday. So yeah, it's around the sort of the data week in terms of high impact news. You've got the US Philly Fed Manufacturing Index, which is forecasted at 9.6 from the previous 9.0. Okay, so yeah, I mean, there's some interesting pieces of data there which will definitely move the market. I mean, you've got Yellen speaking twice, so that's definitely going to be key focus point in terms of the US dollar, and quite a bit of UK stuff as well, so cable should be quite interesting there this week. But let's focus on these charts. This is the weekly chart. What is going on? Well, basically, let's focus on last week's candle. I mean, as we do these on a weekly basis, the previous weekly candle I think is always quite interesting to look at. And last week's candle was just generally bullish. I mean, it's bullish engulfing, but do be careful because there is a bit of upper wick on that. So the sellers did try and push that down at the end of last week. As you can see, I've just flipped it to the daily. You can see. So I mean, last week was pretty much bullish for the start of the week. Some solid bullish candles there. And at the end of the week, it did taper off a bit. So that's why we got that in this weekly candle. So sellers did come in at the end of the week to try and push it back down. So yeah, interesting really. I mean, in terms of, let's just flip it to the daily, because we've been speaking about these two setups, and then it should give us a bit more clarity going into the week. So this is the first setup here. This is the bullish move from the year low to the year high. A lovely uptrend retracement coming off this sort of 61.8, 50% sort of range area. 100-day moving average as well acts as nice support, and it's rotated towards the upside. The bulls, I'd say, who are sort of long-term players in this setup, I'd still expect them to see. I'd expect them to want to see this take out the 0.0% line. So basically, the yearly highs. For all that to happen, I mean, you can see it's retracing now. So the reason it is retracing, I think, if you pull up a 78.6 level. I mean, on these videos we just focus on the 60%, but I think the 78.6. is what is holding this euro at the minute. And there we go, pretty much to the pip. Sellers came in here and brought this back down, and they'll be looking for this move to come down and test the 0% line as well. So it's a big sort of bull bear fight. Two setups in play. Of course, I personally think the biggest setups normally play out. They have sort of higher odds. But there's nothing stopping that selling that bearish setup play out. For the aggressive bulls, really, this kindly flips towards the smaller term time frame now. This move here, which is the sort of the bullish fib within that bigger fib. So this move there within that bigger uptrend. This 50% here comes in at the coincides with sort of 50-day moving average, so it should be quite interesting. I mean, it does look like it wants to retrace, so I would not be surprised to see over the next couple of days see it retrace down towards this 50%. So keep an eye on the action there. It could be quite interesting, I'd have thought. And that's pretty much the moves that I'll be focusing on this week. I'm definitely keeping this one up now, because it's a pure sort of move, really. I mean, ideally, these bullish setups. I mean, I'm not a massive fan of the ones that the fibs inside of the bigger fibs, but it's quite a nice move. I mean, it's a pure sort of uptrend here, and then if it does just do a standard retracement, then it should act quite nicely. But hey, just keep an eye on the price action if it does come down towards that 50%. Also, notice here on the 1 hour there's 200 SMAs lining up with the 50% as well. It's also previous support around here as well, so yeah, it could be an interesting one there. But they're the setups in place. You've got the bullish setup on the daily, then you've got the bearish setup, and this smaller one here which can be seen on the daily 4 hour or nicely on the 1 hour as well. Okay, let's look at cable. Cable similar to euro in terms of candle pattern here. So a nice bullish candle, but there is a bit of upper wick on that. So I'd expect it to definitely come down this week in terms of a couple of days at least. And of course it could just come down as just a brief retracement and then rip up. But I still think on this cable chart, if you look at this weekly and look at the upper sort of wicks here, I just think it's just a retracement. I think it's higher odds for it to come down than to go up. I'd rather be selling this pair than buying, definitely, and just purely just looking at this weekly chart. I mean, price does tend to want to come back to its moving averages at some point, and of course we're a long way away from them, so I would not be surprised to see a retracement on this chart. And then, I mean, if you look at the daily, you can see the last sort of few days, it's just pure retracement candles, really. So that sort of matches with the weekly chart as well. But in terms of the 4 hours, quite an interesting chart. We've had these nice moves here. So lovely fib move there, pretty much off the 61.8. Nice uptrend, standard retracement, not too much chopping around, and then we just ripped up. So the next sort of move that a lot of people will be looking out for in terms of this, the sort of aggressive buyers of cable, they'll be looking at this move. In my opinion, I think a lot of people will be keeping an eye on this move on the 4 hour and on the 1 hour as well. And the 50% here comes in at one spot, 66.86 here. So that's definitely a sort of fib move to keep in mind on cable. That's pretty much it. I mean, of course, look at the round numbers as well. They've been played out very nicely, but in terms of fib moves and the overall sort of picture, I'd expect, it just looks like it wants to retrace, to be honest with you. Keeping out the 100-day moving average as well, it's acted as nice support a couple of times as well, so I wouldn't be surprised to see it come down there this week, but I definitely think it's going to retrace this week. And just purely in terms of that big upper wick on the weekly candle, normally the upper wicks do tend to play out, and yeah, and it's made us, in terms of the previous highs as well, and it's testing big resistance, decent upper wick. Yeah, I'd not be surprised to see it come down here, to be honest. But let's see, it should be an interesting week on cable, definitely. Dollar Swiss on the weekly, last week's weekly candle, just a standard bearish engulfing candle, to be honest. We've been speaking about on weekly, on this dollar Swiss weekly chart, in terms of the bigger picture. This bearish setup here, so from the highs of 2010 to the lows of 2011, sellers coming in at the 61.8% retracement will be wanting to see it grind down towards the 0.70. The 0.7066 level. Of course, we're a long way away from that, but it's just good to keep it in mind here. In terms of this weekly, the overall picture is bearish, in my opinion, and it looks like it's just in grind lower mode. The counter move of that, which we've spoken about before, it's good to keep it in mind though, is this move here from the lows of 2011 to the highs of 2012. The 50% comes in at 0.8519s. So don't forget that level. It looks like it really does in grind lower mode on this weekly. But of course, there's a lot of there's going to be lots of interesting moves until we get down to that level, if we do get down to that level, in terms of these sort of shorter term time frames. An interesting move here. I've left the 76% retracement up because that is the sort of key level that it's testing. I think you can see it clear on the daily. Yeah, you can. That's on the daily here. I mean, I'm not a massive fan of the 76, but you can see it does act quite nicely occasionally. Nice uptrend here from the pretty much the March move up. Then we've got stuck here at the April high, retracement down, a very quick retracement as well. You can now see we're getting supported here at the 78.6 level, and that also coincides with a nice round number, which is the 0.87. What have I done there? Let's do that again. Yeah, I'll put in the name and the parameter. That coincides with 0.8750s. So that's the key line in the sand currently on dollar Swiss. But but also it's good to keep in mind why we've had that quick retracement. And we spoke about this fib over the last sort of couple of weeks, which is the year high to the year low. Remember, it's a nice downtrend, smooth retracement up, and a lovely sell-off at this 50% retracement and 100-day moving average confluence there. So really nice sell-off here. I mean, it looks like we're going to get a brief bounce up here. If we do, keep an eye on this 50%, if we do come all the way back up here. But the aggressive sellers, I'd have thought, will be looking at this move here. So I've just flipped it to the 4-hour chart here. Nice retracement, I'd have thought. It looks like it's going to ask what's going to happen. Of course, it doesn't have to. It could just really sell off from here. But I'd expect some sort of retracement up here towards this 50%. And that 50% comes in at 0.8848. So that also coincides with a nice sort of the round number 0.8850s. So keep an eye out on that. And the moving averages are coinciding with this sort of level as well, this sort of area. So there's a nice move there. If we do sort of retrace over these next couple of days, keep an eye on that. It's the same move on the 1-hour chart as well. And similar to Euro, really. I mean, how many times have I said that's just a sort of mirror image chart? So on Euro, got a lovely uptrend on this 1-hour chart. Nice fib move we're keeping an eye out for. Complete mirror image move here on the dollar Swiss. So I mean, yeah, I forgot to put the round numbers up, but I mean 138 is definitely keeping it's just above the 50%, and then the 137.50s as well is definitely a level to keep an eye on there, sort of coinciding with around that sort of 50%, 61.8% range on that euro, you can see. Yes, that's pretty much it on the dollar Swiss. Some interesting moves there, interesting levels, and of course don't forget actually that support as well, where the lows are here on the dollar Swiss, which is pretty much the 87 handle. So that's the key sort of line in the sand as well. Definitely a key support to keep an eye out for there. We had a lovely spike low there, remember. And then a lovely move towards the upside. Okay, let's have a look at the Aussie. Aussie is still in grind high mode after the couple of sort of weekly candle closes above the 50-week moving average. It looks like it's just going to grind upwards towards the 100-week moving average here. Fib to keep an eye out for. We've spoken about this one before. But we've got the close above the 61.8, so keep an eye on the 78.6. I'm not a massive fan of it, but just there's no harm in keeping an eye out on the price action there. And the other one to keep an eye out for in terms of fib moves is the fib from the 2013 high to the 2014 low. So that the 50% there comes in at 0.9621, and as it's near a round number, definitely draw that up there as well. So that's the 0.96 handle. You can see there coincides nicely with that 50% retracement. And of course, if we do get a retrace on this weekly, then the fib from 2014 lows to the 2014 high is definitely one to keep an eye for. But of course, we're still a long way away from that. But I'm sure we'll look at those moves in the next sort of few weeks. In terms of the daily chart, so daily chart, still looking at that fib, which I just spoke about on the weekly chart there. And in terms of moves toward the fibs towards the upside, yeah, I just did speak about that one there. I mean, it's not an amazing move in terms of this sort of daily chart. It's not that pure fib move. Although we do have some previous sort of support here at the 50% and there's previous resistance as well. So let's say it has topped out here, and it could well have topped out here because we have formed some nice sort of a nice upper wick here. It could be an interesting move. I mean, it is quite a pure move on that weekly. When I say pure move, I just mean sort of pure uptrends, not so much chopping about, going sideways. Nice uptrend. If it does do a quick retracement down in terms of like 3 candles, maybe 3 or 4 weekly candles, then it could be a decent move there. It definitely looks better on the weekly, I think, than the daily. And to be honest, I prefer this sort of fib move than sort of taking this sort of low round here or this one here. It's not a sort of clear swing low, maybe that one there, but I'd rather just use the obvious one, to be honest with you, because they do tend to act better. I mean, in terms of the shorter term charts, nothing majorly of interest here in my opinion. I mean, we spoke about this move before. That was a nice fib move that acted quite well, but these just haven't retraced far enough. I mean, they're pretty much I'd assume they'll be off the sort of the 23.6% fib, which isn't a favourite of mine. And that one there is probably off the 38.2. And the reason I don't really like them because they don't really form a sort of clear swing low like these ones here. These sort of clear, obvious dips here, which are easier to fib in my opinion. So nothing major of interest in here on the Aussie. Not as technical in terms of the shorter term charts as a euro or cable in my opinion. So yeah, hopefully it does some sort of quick retrace this week, and then we can sort of look at this move here, the sort of 0 spot 90 60 level. Definitely. I mean, the key line in the sand, definitely. If we do come back down there, is the 0 spot 90 handle, which floats in between that 61.8 and 50% retracement. That's the forex done. Let's have a look at gold. Gold is all about this move here we spoke about the last sort of couple of weeks now. That move there, we got that lovely weekly reversal after NFP, remember. We were saying that video, if we get a weak number, because it was just below this 50%, I think. I said if we do get a weak number, do not be surprised to see it form some sort of nice bullish hammer. And that's what we got. And you can now see last week's weekly candle, just a standard bullish candle. Interestingly, we closed above the 50-week moving average as well. So in terms of bias on this gold chart, it's just purely towards the upside. I would not be surprised to see these 1392s get taken out over the next few weeks, and then potentially get a move towards that 100 week moving average. And in terms of fibs on this weekly chart, this would be one that I'll definitely keep an eye out for. Of course, we're a long way away from it, but reason why I think it's interesting is because we have the 200 week moving average flattening out around this 50% level, so we should get some really interesting action if we do get up there. So in terms of shorter term charts, if you flip it to the daily, so we've got this same move, remember, definitely keep an eye on that. I mean, if it does say, let's say if it sort of retraces around this 50-day moving average here, keep an eye on the 50% or even the 200-day moving average. That acted nice and technically. But in terms of the counter move, which I think has to be in focus, that's the move there. So we haven't quite hit the 50% yet. We're currently getting stuck at the 50-day moving average. But I would not be surprised to see it test that 50% potentially this week or next week even. Well, it could even test it today, but it looks like it wants to sort of retrace a bit of this 50-day moving average. And if it does so let's say if it does retrace off this 50-day moving average, then definitely keep an eye on that 50%. So that comes in at 1286s, or if you're an even aggressive player, I'm just going to we'll leave on that daily actually, it looks a bit clearer to see. Then this smaller move here, we've got some interesting previous support off that 50%. That comes in at 1303s, so as it's near a round number, definitely keep an eye out on the 1300 marker. That could be the key support there if we do get some sort of retracement. So yeah, gold, nice and technical. Got the counter move there. We've got that smaller fib move. We've got the 1300 to 200-day moving average. Lots of stuff to keep an eye out for in terms of price action. If we flip it to the 4-hour, yeah, there's a lot of sort of mini dips there. So I think that if you're a sort of really aggressive buyer, sort of dip buyer, then keep an eye on these sort of moves here in terms of support, resistance, and round numbers, etc. They've been playing out quite nicely. I think I haven't really majorly focused on them. Now that's quite short of the 50%. I don't think they've been playing out in terms of fibs, to be honest with you. Actually, that one has. That was nice off the 78.6. That move there. No, it hasn't quite. They haven't been playing out technically in terms of fibs. Okay, then that's all for today's video. Hope you found that video useful. If there's any other moves that you want me to have a look at next week, then feel free to comment under the YouTube video at our YouTube channel, which is AGM Markets, or feel free to send us a tweet to our Twitter feed, which is